Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is December 15th, 2011. Today's market was pretty interesting. It had the makings of a good strong bounce today that could go up 20-25 points. I thought there was a fairly good chance that that would happen, but it didn't. The pre-market looked good, but as soon as we opened, and when you look at the S&P, you can see that a little bit better. You'll see we shot right up, and then from there on after, within the first 30 minutes, we started seeing cracks in the dam, and we sold off, and then we bounced up, and then for the rest of the day, we churned and grinded and burned both the bulls and bears collectively. I made more trades than I probably should have today. Just to give you a quick overview, I traded in TZA once, averaged into that position, so then I had TNA, which I traded twice. I traded GLD, SCO. So for me, that's probably a lot of trades. I like to usually keep my trades between 2 and 4 a day. But if there's nothing there, I'm not going to take it. I'm not going to force things on the market. But I started forcing things, I believe. If I think about it long enough, I think I could come to the conclusion that I was forcing trades. But what I'll do is I'll map this out so you can see exactly what I was doing during the day. So you can see here that we were selling off fairly heavy in the early going, and what I did is I drew a trend line off of the highs right here and just going straight down, and it provided some good trading opportunities. Alright, so I traded I traded off of the SPX, but I used TZA and TNA as my vehicle. So when we got, let's see here, when we sold off here and then we started marching up a little bit higher, I drew another trend line that looked about so. And I said to myself, okay, when we break that, I'm going to go long on TZA, which is the Russell 3-to-1 Ultra ETF. So you get 3 times the amount of gains as the Russell does inversely. But for timing purposes, I like to use the S&P and quite frankly ignore the actual action in TNA and TZA and base my stops and losses off of what the S&P does. A little bit different than what most people do, but I feel like it clears out some of the noise that you will get in the TNA, TZA type of ETF that's leveraged, and also there's a lot more noise in the Russell too because they're small caps. S&P's large caps, so it doesn't seem to be as volatile, which allows me to judge when to get in and get out a lot easier without getting these radical movements. But we did get one, and it's funny, when you have your chart zoomed in too far, you get a move like this, and you're like, what the heck was that? You know, you're thinking that, you know, somebody just dumped $2 trillion in the laps, you know, as an inheritance to the European countries. But zooming out, and that's what happened. I was like, oh my gosh, what happened? But that wasn't the case. It was literally a bounce off of no news. It was probably just somebody short covering some firm or whatever, and it pushed it right up to that trend line. At that trend line, actually the next candle over is when I added more to my TZA position, and then we from there tested it again and then sold off. I sold half of my position right here on this candle, and then sold off the second half right before we got to that candle. I sold it off right here. So 2 trades. I made like 1.25% off of one, and then I made 3% on another. So it was good gains overall. I was actually looking like I was going to get hammered because I was in the red pretty good when we were hitting this candle right here. So overall on TNA, TZA, and I know I'm not actually showing you the chart on TZA on this particular trade. I'm showing you the S&P, but to give you more of an understanding of what was going on, this candle here really took a hit on my position. I averaged in right here, and then we moved up, but it got out of that candle and then got out again here on this candle. So you can see this is a lot noisier of a chart, much more volatile, but if you can ignore that and trade off of SPX, I actually think it's a pretty good trading strategy. I think I'm the only person I've ever met that does it. Not to say that makes me some kind of market genius or anything, but it's just a strategy that works for me. And so then we go along throughout the rest of the day, and I see this pop above the trend line here. I'm thinking, man, it would really not surprise me and go against the, you know, the popular belief in the market right now if we got an end of the day rally, because we've just been selling, you know, profusely throughout the day. So that's what I'm thinking. Okay, and then I see it, you know, pop its head above this trend line, so I go long TNA. Boom, I had my stop, below this trend line here. Boom, it gets me stopped down in about 10 minutes. Frustrated to see the candle pop back up again, so I get back in it a second time, and this is where I start over trading a bit, and we get a good candle. It looks like it could go a little bit higher, and no, and I get out right here. So on TNA, that was a little bit more of a loss. I probably ate up about 2/3 of my profits from my trading in TZA with the losses I took in TNA, but overall, really, TZA was one trade, TNA was 2 trades that I failed both on, but I was able to manage the risk in such a way to where it didn't even eat away all the profits of one trade and TZA. Hopefully I didn't get you confused there with throwing those 2 similar stock symbols all around, but you get the point. I thought about at the end of the day jumping in TZA, but then I said, you know what, Ryan, you do that, you're being a buffoon because you're over trading it, you're getting false breakouts, and you got 10 minutes left into the day, 5 minutes really if you were to trade off of this breakout, and last 5 minutes is just a coin toss, so I didn't take it. But that's basically how I traded TNA TZA today. Gold, GLD, got in this one as a swing trade. Let's pull that one up. Okay, important to look at the weekly chart on this, and that's what I'm basing my trade off of, going back to November of 2008. You have this beautiful trend line, and I think that's why support sort of kicked in right here today for gold, and I bought literally right on that mark there, like a 153 or so. I'm underwater on it. It's moving a little bit better in after hours, but whether that holds or not at 5:30 East Coast time remains to be seen. But I am underwater on this position, not by much, not even a full percent, but about a 0.5%. We'll see how this one plays out tomorrow. I'm a little bit nervous holding it because you can see some of the huge moves that we have gotten on a daily basis this week. I mean, literally, this week we have seen it go from 166 on GLD all the way down to 152. So that comes out to about $140 an ounce that it's shed this week. It's quite possible we get much lower in GLD, especially if the market heads south. It's a very tricky stock. It's not 100% correlated with equities right now in terms of equities go up, gold goes up, and vice versa. But today it was acting that way. VIX, it's worth noting. I don't know if it shows up very good on this chart here. Yes, it does. Good. Just some weird stuff in the VIX. We are 2.2% down on it today. Monday and Tuesday, the VIX actually went down went up despite the went down despite the market going down. Usually VIX goes up when the market goes down and vice versa. Today it wasn't so. Today it went with the market, but there was some strange spikes that I'm not used to seeing in VIX based on small candle movements. But anyways, go back when you get the chance, look at that. It's not going to show up very well using this software. So the reason for me getting into SCO was basically trading off of this bull flag pattern in SCO or bear flag pattern in commodity futures. It shows a lot better on the oil futures, but you can sort of get an idea for what I was looking at here by simply looking at the 5-minute chart of SCO. Now this is a 2-to-1 short on oil, so you got this bear flag here, and then the underside of that bear flag. And somebody on Twitter was calling me out saying I don't know what the heck a bear flag is or a bull flag, and I've been doing this for a long time and made a lot of money off of these patterns for me not to know what this is. But anyways, I think he dropped his argument. So in any case, you have this bull flag here in SCO. Once we broke out of that, I got long on it and made about 3% on the trade. So very happy with that. I can live with that kind of a trade. So went up here and then I got out. I think that I don't have the prices right in front of me. Yes, I do actually. I got out at 43.23. So shade below the day's highs right here around the consolidation. Very good trade for me. Happy that I was able to book some more profits. Oil has been working great for me the last week and a half using technical analysis when it breaks down or breaks out, whatever it is, to get long or short accordingly. But the TA on oil has been very nice. You got to huge double top on this thing over recent days. I'll pull up USO so you can see it better. See that there? Boom. First top, second top. It's confirmed it both yesterday and today with the follow through that we got today. Broke through the 50-day moving average. If you're looking at the prices of the commodity, it makes a strong argument for it to go down below $90 an ounce. But in the meantime, you can get a lot of bounces, and I think we could see a rally on Friday since commodities just been getting hammered all week. That pushes, stuff like gold and oil back higher. So that's the reason why I stayed in gold and got out of oil. S&P real quick, because I'm probably up against YouTube time limits here, but back out so you can see this chart a little bit clearer. So looking at the S&P 500 here, I would say that there's a good chance that we're going to test this bottom trend line here in the coming few days or weeks ahead. And when we do, I think there's going to be a lot of support that kicks in. You're going to see some buying programs try to buy this dip. And whether it holds or not, I don't know. I mean, you could see the bounce and then you could see the move back lower thereafter. It's a tough call, and that's why I say trade what you see, not what you think. Because when you start thinking this through, saying, man, I just know that this thing's going to break support, then you're going to get yourself in trouble because it's not going to break support. It's going to bounce off of it and go higher. But when it breaks this part, then you see it's breaking it and you can trade. But when you start trying to think it out and everything and put, I mean, technical analysis is set up so you can see it and not think it. So you don't have to, dissect company fundamentals and come to a hypothesis of your own. You see what's going on and you react accordingly. So for me, I would like to see how the market reacts. I'm not going to try to play the bounce on the S&P, but I would like to see if it can break this support. If it breaks it, I'll definitely start getting much more aggressive to the short side. If we bounce, I'll probably just keep doing what I've been doing in recent days, being very nimble. And then if we can break out to the upside here, then I would get much more aggressive to, as a bull. So we're basically in a triangle here, a symmetrical triangle, using this line here and this line here, and you got channels and all that stuff. I know I might be confusing you a little bit, but to say the least, you have support and resistance lines clearly drawn out. If you want to look at it in a more clear perspective, look at my trading plans that I publish every morning, because they paint a very good picture for you to trade and follow off of. We are over here in oversold territory, so the prospects for a bounce in coming days definitely starts increasing, because this easy money here that we've had Monday, Tuesday, and Wednesday, and then fading the highs off of today, have been made. So as these kinds of days start piling up on the charts, the opportunity for more and more profits greatly diminishes. So keep that in mind as well. Volume was on par from what we've seen, slightly less than the previous 2 days. That's about it. Like I said, join us in the chat room. There's some great traders in there. I mean, really good traders that made some really good trades throughout the day, and you can learn a lot from them. I'm in there all the time. If you don't want to register an account, you have the free guest account that you can still chat with people on. It's preferred that you get a login so we can sort of put a name with the comments that are being made, but we're not going to force you. And then you got the investment system and the Adams Option Income newsletter that does great as well in these kinds of markets that are so uncertain and volatile. That's it for now, so be sure to hit us up again tomorrow in the chat room and in our Traders Lounge, which is our forum, and post your trades on the trading queue. It definitely helps everybody. Take care now. God bless.